What's going on, everybody? This is Jordan with Conquer Trading and Investing. Looking here forward to our afternoon update. We're going to be taking a look at the equity markets here, pumping towards their highs. We're looking at the Russell up 2% today. The S&P is up 1%. The Dow is up 1%, and Nasdaq both up 1%. All of this today is on what it looks like a stimulus package is going to be passed by the end of the week. That's very nice going into the holidays over here. The Santa Claus rally in full effect. Do remember over here, I said things were risky. After those risks dissipated over here, I said it's time to go back into the waters. There were some of you last night seeing us resting on support, took this aggressive entry, which it was an aggressive entry. Get on ya. Nice entry over here, coming in towards the resistance. Are we going to break out of this consolidation over here onto new highs by the end of the year? It certainly looks like it. It certainly looks like it. I know a lot of you are calling or expecting some type of dump. Listen, some of you are really having trouble understanding, is not all the stimulus priced in? The package, it looks like we're receiving, is going to be a little less than expected. By the way, the Georgia runoff election is a big deal. That will decide whether or not we have another package coming and how big that package will be. Do be aware of that. But the markets are not really running off of stimulus. I know you all don't want to hear that. What the markets are running off of is what? Is QE. We're looking at the Fed continuing their purchase next year, another $1.4 trillion in QE in 2021. It's not just the Federal Reserve. The ECB is almost matching that. Between the G10, we have $315 billion of QE coming in monthly. What is QE? It's deflationary. No, it is not. It is hyper asset inflationary, and that is what we are seeing across the board. Tech is deflationary. Do not confuse the two. What else are we looking at over here? Yesterday, we were looking at this trade over here, the global negative yielding debt. We were looking and tracking gold, and we were saying it was time for the jaws to be shut. I want to share this beautiful analysis by Gary that he emailed me over here. This is on gold. I want to share with you this long-term view of gold. This is the bull market we are currently in over here, and we are watching right here, this bull flag develop over here. The breakout over here of this trend line, that is the trigger. We're going to take a look at the chart right now and see if there's any other opportunity. We'll start with gold and silver, then we'll look at the equity markets. Look, this blue box over here, this is for a swing trader, right? This is on the 8-hour time frame where I live. This is what we're looking at over here. I've been saying it earlier in the week, right? This is the level that we got to get above. This little bit of noise, this blue box. Clear 1860, and the possibility exists for some aggressive entries on gold. It does look like that gold is going to snap back. Silver next year, by the way, I believe could be one of the best trades. I believe that silver could go on to make new all-time highs. We'll track it. We'll watch. Especially with President-elect Biden in office and a new green energy push, we could see a big demand for silver as solar panels require the material. Over here now, trading above this level over here, 24.32. That opens up further upside. Now, I'm waiting and I'm waiting and I'm waiting because this game is all about patience, right? Above 26, by the way, this trade really takes off. That's where it's safe to get in here, and that's when we'll be tracking the yearly high of 2020 up towards $30, right? But right now, for those looking to get their feet wet, those looking to jump in a little early, show a little bit of patience. We just broke above this resistance. We're going to flip this over now till support. It hasn't been retested. We're looking for not only the breakout, we're looking for the retest. And then if it holds as support, the resumption off is the safe trade. Now that could develop over the next 24 hours, the next 48 or 72. You got to be patient. This game is all about patience and timing. Let's take a look at the DXY before we get into the index over here. You could see falling right now and printing new yearly lows. I think why 2020 has been a phenomenal trading year, whether it was shorting the S&P 500 in February and in March, and then going long at the bottom, right? Or riding up, the whole recovery, or if it was shorting oil from the mid 40s all the way down towards 14.5, or whether or not it was the risk off trades 2020 has been absolutely phenomenal, but the DXY, I believe, is my best work, keeping everyone on the right side of this market, even when it was time to perhaps take a look at a long and then getting back and finding our way short, keeping everyone neutral when it was time to go neutral until we saw what was happening. Over here now, we're looking at taking out new yearly lows on the DXY. And what does that mean? What does that mean? Is that something that is beneficial to the equity markets? We've seen 30% of all available dollars printed in 2020. Try to wrap your head around that, right? Try to wrap your head around it. Or try to wrap your head around some people are still bullish on the dollar. Try to wrap your head around that. Listen, if and when the time comes, the dollar is going to take a turn. We will be the first ones there, but we're riding the trend and we will continue to ride the trend. S&P 500, right? Everyone knew last night as we were coming down over here, the update was provided over there. I said we're into support, and as long as that support holds, the aggressive entry would be the resumption off of it. Here it's occurring now. What happens next? It looks like we're going to be testing the resistance, which is the all-time high. How big of a resistance is that? Is there anything stopping us by the end of the year from printing new all-time highs? I don't know. There's always wild cards out there, and believe me, a black swan will be something no one is expecting. Are we looking at possibly January 6th as a potential risk event? Maybe. I'm not. Are we looking at January 20th as a potential risk event? I don't think so. I think over now the markets are kind of pushing away all the risk events, getting it out of the way. We, going into them, what did we do? We worried about our risk. Those two risk events, whether it was the delayed Brexit or it was the Supreme Court here in the Texas case, are now behind us. We're now seeing, and I said that the narrative was going to turn to stimulus talks. Here we are, right? And that's just noise, the stimulus. That's noise. What is the signal is the QE that's coming in 2021 from all of the central banks. Something that I am concerned about, something I want to share with you over here before we get into the Nasdaq, before we get into the rest. Something that really I'm seeing as a potential red flag risk event is I don't see anything so far in this stimulus package addressing the needs of those right now who are unable to pay their rent, those that are unable to pay their mortgage. Don't forget, everyone who's not paying rent, there's a landlord on the other end of that on the hook. I don't see any talk whatsoever about any funds going towards those people. I do see a lot of money going towards failed policies in cities, helping to bail them out. I don't see anything whatsoever helping the business owners who are losing their business because of the lockdown situations. I don't know what's going to happen. I am concerned about it. I think that is a red card if we do not see any type of relief, whether it be for those that are unable to pay their rent, those that are unable to pay their mortgage. We could see a severe shock to the housing market. I'm going to continue monitoring that. And that's something that I'm definitely looking at, something that I'm concerned about. We'll see what happens going forward. But right now, back on the 8-hour and where we are. And if anyone has any insight to that, please in the comments. I would love to hear that. You know, when I'm interested in learning something, I want to read every available opinion and learn as much as I can. So if you have any insight about the current state of the housing market, please do share that with me in the comments below. I do read all the comments that is possible. I try to respond to all that I can. What are we looking at now? This is beautiful. This consolidation over here, right around all-time highs is beautiful, right? Everyone knows we're always watching our downside. As long as this support holds over here, this is looking super solid. The Russell up 2% today, going on to make new all-time highs. Nothing else to say about that, but do not chase momentum. We are looking to be preemptive of momentum. The Dow reclaiming this trend line. I don't know how important, honestly, this trend line was. I said that this morning on the live stream. I was not aware of this support over here, and I should have been. This is what the market's paying attention to. Right? What about the Nasdaq over here? Reclaiming our trend line. That is a big deal. That just set up the bullish tone. The aggressive traders were in down here. I was not. There's no way ever I would take that trade into the resistance. I don't think there's even a one-to-one risk reward over there. But what I am waiting for right now is a test or a break of new all-time highs. Patience. And then the pullback. And as we do test this trend line, if we resume off of it, I think the Nasdaq is going to be a beautiful play. I will be watching that What about Bitcoin? What about Bitcoin? Thank you everyone who supported that TradingView update I posted yesterday on Bitcoin. We're resuming out of it right now. It looks beautiful. And there's nothing else to say. We have all-time highs in our sights. People are worried about 20,000 and the possible sell walls over at 20,000. I don't pay attention to any of them. If you're a Bitcoiner, you know all that sell walls is an objective for to be taken down. It will be taken down. Do not think that is something to worry about. I do not. But what I'm watching is price. I'm watching this beautiful price action after consolidating over here, the breakout, the retest, and now the resumption up. Looking over here to extend further. What am I watching? I am watching this line over here. This is very important. Anyone, especially anyone who's trading with any type of leverage in Bitcoin, do pay attention over here. If we lose this trend line over here, this support, right? Do watch out. That is a negative technical event that could lead first to a drop towards this trend line over here that's coming in at 17,000. I personally would lighten up my leverage trade if we lost this trend line support over here. And at that point, if we lost this trend line support also, I would lighten up again, because at that point, the 30% pullback coming towards 13,800 is absolutely in play. Always be looking for the downside and what the risks are. But everything happening right now across the markets is uber bullish. Except, of course, here for the dollar. The dollar looking to go ahead and print new yearly lows right now. And we are tracking right now over here a 2-year low coming in at 88.40. It's a short update today. Short but sweet. Listen, I'm not going to talk if there's nothing to talk about. Everything right now is on autopilot. We're coming into the end of the year, right? Everyone should be riding and safe. I'll continue to watch our downside. I'll continue to watch out for the risks in the market. I'll continue to do my best to keep everyone on the right side of the market. Thanks for your support. If you're still here, or if you're still listening, please show some love. Smash that like button. I'll see you in the morning.